Hello, Seasonal Vantage Insiders, Alex from MarketWise Asia. So today's date, it is the 8th of April 2024. As I'm doing this video, the time now is about 3 p.m. And at my side, okay, it is actually raining cats and dogs. Okay, it is raining very heavily. Okay, so let's kickstart this weekly update right now. So the chart that you are seeing right now here, it is the S&P 500 cash index. Okay, so I've been mentioning about this 5,200 level for the past, I think, 2 weeks or so. Okay, so this 5,002 level, it is the key level to watch. Okay, so the market, okay, the indices actually started the second quarter of this year pretty volatile. So you can see over here that, okay, on the Thursday, 4th of April, the market actually had a very huge sell-off. It was down minus 1.23%. Okay. In fact, on that day itself, price actually broke below the lower range of the CPR. But the following day, on Friday, price actually reversed back up again. So on Friday, price is back above 5,002 level. This is the cash index. Okay, so historically, okay, April, it is a pretty bullish month. Okay, but as I mentioned, I do expect the unexpected. Okay, and because based on the January, February, March, it has been going higher quite a bit already. So my view hasn't changed. I'm still quite skeptical for this coming month or so. Okay, there are a few reasons. So later I will go through with them. Hopefully one by one with you guys. So this is the S&P cash index. Okay, the Nasdaq cash index, we are still below the CPR. Okay, can see over there the 3 dotted lines over there. Okay, and for the Dow Jones Cash Index, we are still firmly below the CPR. So out of the 3 key indices, okay, we are still below S&P and Nasdaq. It is still below the CPR. Okay, if you're talking about the Russell 2000, okay, let's go to the Russell 2000 futures RTY. We are also below, okay, the CPR. So all in all, of the 4 main indices, 3, it is still below the CPR. If you're talking about the futures, right, S&P 500, okay, as of now, okay, the market, it is slightly in negative pre-market futures, okay, we are slightly below the pivot point. Okay, for the Nasdaq futures, okay, we are also below the CPR. Okay, the RTY, the Russell 2000, we are also below the CPR. For the Dow Jones futures, we are also below the CPR. So all in all, be careful of the market right now. I am still a little bit bearish. Okay, bearish as in short term. Okay, maybe within the next 1 month or so, the market might have some correction. But again, you need to understand that, okay, the price mover for this coming week could be the CPI index, which is the inflation data over there. So the inflation data, it is going to be on the this coming week is 8th of April, right? So 8th of April. So can see that the Wednesday at 8:30 p.m. Singapore time, okay, the CPI data will be out. The previous was 3.2. Forecast year on year is about 3.4. Okay, regardless whether it is up or down, I believe the market will, this CPI data will be the catalyst for the market to actually move higher or to go down lower. Okay, and I'm not God, so I don't know how the market will go, or I don't know what's the number for the CPI data, but this could be the key catalyst for the market to go higher or lower. So, which means that for this coming week, right, the market, okay, might stay within this range over there, S&P 500, okay, which is at this big candle range, okay, somewhere around this CPR area, okay, between 5270 in the futures and also below the 5,200 level in the futures level. So this will be this level for the next 2 days or so, Monday, Tuesday, which is tonight and tomorrow. The market might move maybe within this area until on Wednesday. Maybe it could be go up or go down. I don't know. But okay, my bias is more towards the downside. Okay, this is my personal view there. All right, and also let you know, because there are a few factors. Okay, like the one that I mentioned previously before is actually this is the NYSE, New York Stock Exchange McClellan Summation Index. Essentially, this is a market breadth, or you can call it a market internals indicator, which is based on the advance and decline line. And you can see that, you know, prior to that, let me just move my cam over there. So you can see that, okay, I added in an 8 EMA to show us the signal line. So for those who just joined SVI, right, okay, this is also one of the market breadth which I don't show to the public live. Okay, so you can see that prior to that, okay, you can see that market actually crossed the 8 EMA market, you know, this is the ranging of it after cross up over here, you can see that market go higher and then continue go higher, okay, and then cross down lower over there, market go down, okay, and then it didn't really go above higher, and then continue go lower, market continue go lower, okay, and then on here where the market made a bottom in last year November, okay, and the market continue to go higher. Of course, you know, this year is the exceptional, okay, while the NYSI crossed down lower, the market still continue to go higher. So if you remember, you know, at the start of the year, I was pretty bearish. One of the reasons is because of this NYSI crossed below the 8 EMA. So, you know, I was wrong. You know, subsequently, you know, price continued to go higher. And then let's say, for example, okay, you didn't, you know, you didn't stay, you actually, what I mean that you stay bearish, but when the NYSI cross higher, okay, that's why the reason why I remain bullish again. Okay, so cross higher again. So that's how in about mid February, I continue to go for long position. You know, and right now you can see over here that the NYSI has crossed below the 8 EMA. So this again, okay, this doesn't mean that the market will definitely go down lower. Okay, but you know, this should be acting as a cause of concern. Okay, it tells you that the market internals is actually not that good. Okay, so this is something that I'm quite be wary of. So my bias is more towards the downside for now, and and also yeah. So this is for the index. Okay, and for the RRG chart. Okay, this is based on the daily time frame. Let me go to the daily time frame first. So you can see based on the daily time frame, energy is still leading, you know, utilities, okay, is leading also. Can you see that the health, okay, it is leading as well. The industrial and are doing quite okay as well. All right. So technology, you can see that it is actually not that strong. If you drill down to the 60-minute time frame, which is the last hour, as in the hourly time frame, based on the last Thursday and Friday price movement. Okay, the last 1 or 2 days of price movement, you can see that, you know, the consumer staple, consumer health, utilities are all going higher as well. Okay, energy is still leading. You can see the technology is also not that strong. Okay, the tech, big companies are not that strong, big tech. And if you actually go to the candle chart, okay, have a big candle glance, all the sectors at a glance over there. Let me just go to this S&P sector. So this is the SPY, okay. This is the key indices. You can see that, you know, consumer discretionary, okay, it's not so strong. Consumer, not this is the comms, is still okay. Technology, you can say compared to S&P 500, it is actually not that strong. I can see that the 20 days EMA moving average is actually starting to cross down lower. So compared to the SPY, moving higher very nicely, the technologies are rounding top is not that strong. Okay, so because, you know, the indices, okay, the tech have a lot of weightage on the key indices. Okay, so be careful of that. Industrial is still pretty strong, material is still strong, and energy is still strong. Okay, staple coming down to a pullback at the 50-day MA. Healthcare is not so strong. Okay, utility is still pretty strong. Financial is still pretty strong. Real estate is not that strong. So all in all, you have a rough idea, okay, what is actually stronger, what is actually not so strong. But anyway, okay, how can this help you in your trading? That's the most important thing, okay? So the member side, right? Remember I mentioned, I think, do download your report over there, this SV report, okay? I've added in the bearish data over there. So the bullish data for the second quarter, okay? The Excel ETF, Excel and the PDF is all here, and the bearish one, it is over here. Do download when you have the time, okay? And also let you know that is it Thursday? Friday, sorry, end of the week update. Okay, I mentioned that I shorted certain stocks over there. Okay, so the market is pretty volatile. So I mentioned that I actually shorted. Did I mention? I shorted AAON, Applied Material, which is called, which I call AMAT. Okay, AMAT STRL. I actually get stop out of AAON. So let's head over to the chart right now. AAON. This is Aeon. Okay, so price actually continue to move higher. This is pretty unexpected for me, but nevertheless, okay, I get stop out, I just exit. So this is just another one trade. Okay, it doesn't really hurt me. Okay, I'm still holding on to AMAT. Okay, AMAT, this is short. This is Applied Material. Okay, price action still not looking that strong. Okay, still okay. I mean that price hasn't really gone down quite a bit, but I'm still holding on to this position. And then STRL. This is the Sterling Infrastructure. The price is also below the CPR. Okay, so this is the two short position that I'm holding on. The only long position that I'm holding on, it is actually EWH. This is the iShares Hong Kong ETF. Okay, so on Thursday it was a down day. On Friday it's going to go higher, and today for STR for Hang Seng is kind of neutral. So I don't know how the market will react tonight. So this is the only long position that I have. The other one that I have, I'm not sure how many actually entered TMO. I actually exited, which a scratch trade over here. So I mentioned, right, okay, price actually go higher. Okay, I actually not so keen to stay on the market on this position. So I actually exited somewhere here. So it's a kind of scratch trade, break even trade. Of course, then on Friday, price reversed higher again. But nevertheless, it still didn't cross above the CPR. So all in all, not so keen on a long position. Okay. So again, my views for this coming week is more towards the bearish side. So you can see on the data, right? Let's head over to the bearish one. Okay, no, head over to the bullish ETF. This is a bullish ETF. You can see that there's a lot of sector industry over there. I can see that a lot of this mid cap, S&P 500, all this Russell 1000 to 2400, mid cap value growth, all this, a lot of large cap, all this basically are the key indices, which means that typically, historically, okay, the market tends to go higher. Okay, but price action wise, I'm not so sure for this week or so. Okay, you can see a lot of materials also have been flying. Okay, based on the historical data, XLB, XLY, okay, and all these, okay. But personally, I'm not so keen, so I'm staying out of the bullish side for that. Okay, and then bullish data wise, these are, you can see that also many stocks, but I'm not so keen for now. Okay, this is for this coming week. It is actually from the 7th of April to 14th of April. So you can see that I already filtered 7 to 14, 8, 9, 10, 11, 12. Okay, these are the bullish side. So there are quite a number of stocks. Okay, and then for bearish, in fact, not a lot. So the one that I've shorted is AMAT. It is over here, and then the other one is STRL, which is earlier at last week. So it's inside also this week. So actually not a lot. So once again, it doesn't mean that I am bearish. You have to follow me. Okay, I could be wrong. So if you really think that hey Alex, I think I do agree with you. I think that the market will continue to head higher in April. Then by all means, okay, go ahead and you can look for the bullish ETF or bullish stocks to go for a long trade. Okay, for now, okay, I'm happy to just keep my intact short position and my EWH long position. That's all for now. I don't see any setup for now. The only setup that I see, okay, for long position, which I think it is actually this Visa. Okay, this Visa, okay, this is actually has been going higher. Okay, has been going higher. Okay, so Visa. So if you look at the data over there for bullish, right? Also for Visa, it is actually from 11th of April to 6th of June. Okay, 57 calendar days for the past 11 years, 10 years, it ended higher. So Visa, right now, it has a pullback where it break below the prior swing low, but we are still in an uptrend, but there is also a wash and rinse pattern. Okay, on Friday, you can see that this is on Thursday where price closed lower than the prior day low. So the prior day low, the low, it is actually 276.56. 276.56. Okay, you can see that on Friday price actually closed higher. But personally, I'm not so keen to go long on Visa. But you know, who knows? Okay, doesn't mean that I'm right. Okay, but you know, price maybe can just go higher. I don't know. Okay, but personally, I'm not entering a Visa. But of course, you know, price could get resisted at the pivot point over there, which is at about 282 or so. Okay. Yeah, so you know, if the market maybe continue to go higher, then maybe Visa can go higher. But you know, I'm not so keen to go long now. Okay, this is just my personal view. And regarding to the commodities, right? I mentioned about crude oil and also for the gold. Okay, it has a pretty nice run up. Okay, I know Melvin said he's going to try for opportunity to go long again. I'm not sure whether Melvin actually entered into oil, but personally I didn't. Okay, because pretty hard for me to chase. I thought my style to chase higher lah. But anyway, just to let you know, for gold, right? Not for gold, for crude oil, the best seasonal period, okay, it's going to end soon. I think it's about 12 or 12 April or so. Okay, so based on the price action, okay, it also the potential reversal signal, my star signal has also appeared. So do be a little bit careful, okay, which means that I feel that the reward to risk ratio, it is not in your favor anymore. Price has already gone up quite a bit. Okay, if you're trying to buy now, I think the reward, it is not in your favor. Okay, for gold, okay, also there is a reversal star signal appearing. So again, if you want to go long, do be a little bit more careful. Okay, the market, this commodity market might reverse anytime soon. So I won't be heading long into gold and also in crude oil. So just be a little bit careful on that. And other than that, I think there's not much thing for me to add. Okay, so once again, just a very brief recap. I am more bearish bias short term, so I won't be keen to add any long for this week for until, okay, I don't know whether after the CPI data or what, I might continue to be bullish, then maybe I'll be more inclined to go long. For now, okay, until Wednesday, I'll be more inclined to stay aside. Okay, don't have to trade every single day lah. Okay, all right. But again, doesn't mean that you have to follow me. If you think that the market is going to go higher, feel free, okay, to make use of this data to make your trading decision. Once again, you need to understand that you are purchasing data from me. Okay, this is not a copy trade signal service. Okay, so with that, I wish you have a good day ahead. And once again, tonight, Monday evening at 10:30 p.m., my usual Facebook Live will be there. So do head over to my public live stream to have more insights. Okay, once again, and see you tonight again. Thank you and bye-bye.